still have a lot of people dialing in. We might give it 1 minute or so, but we'll officially start the webinar now. Anders is a large CPA firm headquartered in downtown St. Louis. We have about 200 plus people at the firm. I wanted to quickly remind everybody to please mute their phone or their computer for the background noise. Anders has assembled a COVID-19 research team so that we can calculate how the CARES Act is going to take effect for all the businesses and individuals and nonprofits out there, which is the crux of what we're going to talk about today. So I'll quickly introduce our speakers today. First, we have Paul Rhea. He's a director of advisory services at Anders. He brings 33 years of banking experience to Anders. We have Dan Schindler, who's a senior tax manager at Anders. He leads operations of the Anders Sports Arts and Entertainment Group and has a lot of clients in the restaurant and craft brewery industries. We also have another panelist, Jeanne Dee. She's a partner in our audit and advisory services group. She specializes in audits of not-for-profits and is the leader of our not-for-profit group. And she also has for-profit clients. So those are the three panelists today. We don't have a formal slide deck. What we're going to do is a question and answer session, because we've been getting a lot of questions from clients, prospects, bankers, and we thought that that was the best way to dive into the new CARES Act. It's the largest act that's ever been put out as far as a dollar amount. So I know everybody's anxious to get started. We're about 205 participants right now. So we'll, Paul or Jeanne or Dan, I'm going to go ahead and start with the questions, and I'm sure it'll take off from there. One last reminder to please make sure that you mute your phone and your computer so that it limits the background noise. And I'll periodically remind people to do that as I hear people typing and whatnot. As we go through each section and questions, we will leave time for questions right after each section, so we don't have to wait till the end. This webinar is also going to be recorded, and it will be distributed to everybody that signed up on the webinar today. So you will receive a copy of it. A copy of this webinar will also be posted on our website and our COVID-19 Resource Center on Anders' website. So we'll go ahead and get started now. First question is for Paul Rhea, who's our banking specialist. Paul, what's the environment like out there right now, knowing that the SBA is not even open yet to take applications? I mean, what's it like? What kind of questions are you getting?
Well, I think, Dan, that seems to be the number one question, at least, and things have changed obviously over the past 10 days, and we know much more today than we knew yesterday, and we'll know much more tomorrow than we've known for the past week. And frankly, the banking environment is strong here in St. Louis, well capitalized, a lot of great banks, and really this is an opportunity for them to do what they do best. So as I sort of joked this morning, the banks are our friend, and obviously our clients are ready to move forward, but our banks are still waiting on some things from the SBA and some guidance, and it's all come incredibly quickly. So what I would encourage people to do is just to remember that, the bank is getting up to speed as much as everyone else here. A lot of experience in this industry, and will, they will certainly get the job done, but it's an opportunity for everyone to get a little closer and get this thing moving. And once these processes are in place, obviously this money will be distributed in the appropriate times, and clients, I think, will see that, but it's just a couple more days before it really starts moving forward. So
yeah, I'd like to tag on to that. A lot of clients are calling because they feel like they need to be first in line with their application on Friday when things open, and of course it's going to be like a dam breaking for the SBA. What we've sort of encouraged people to do is do the things that they know they need to do in advance, which is prepare for the application, get your financial house in order, assemble your financial advisory team, which is your banker, your accountant, your attorney, your business consultant, so that you can all work in conjunction. You just want to be as prepared as possible so that when you do get the final application, because I don't believe a final one has been put out yet, that you can get through that fast and accurately so that you can get in line and get a submission in. I don't know if you want to comment on that or add on to that.
Yeah, Dan, I would just say that, the SBA is an organization that was created for small lending environment, localized disasters, tornadoes, things of that nature. It was really never designed to be the administrator of the largest stimulus package that we have ever seen in this country. So we expect there will be hiccups. And as the banks are given more information every day, they'll continue to move forward with things. And it's happening so quickly. Even 3 or 4 days ago, there were some banks that were not approved lenders. They're getting approved as we speak. So we're certainly going to be in good shape. Just need to be a little patient.
Got it. Sounds good.
I'm sorry to interrupt. This is Laura with Northwest Pediatrics, and I apologize. I just got on this call, and I just, is this going to be recorded so that I can go back and listen to the first half of what I missed?
We already announced that it was going to be recorded. Yes, it will be on our website, and it will be sent to everybody that signed up.
Awesome. Sorry to interrupt. Thanks.
No problem. Thank you. This next question is for Jeanne Dee, who heads up our nonprofit group here at the firm. Jeanne, do all nonprofits qualify for the SBA loan relief?
Hold on. Can you hear me?
Yes.
Okay, great. Thanks, Dan. Okay, so we've gotten a lot of questions about this, and the good news, the partial good news, is that the legislation specifically allows 501c3 organizations to qualify for the SBA loans that Paul's going to continue to talk about, the 7A loan program. That's very specific in the legislation. That means, unfortunately, 501c6 organizations, C5s, unions, C4s, we don't believe that they are eligible for this particular program in the CARES Act. There are other programs in the CARES Act where we think the language is more broad for not-for-profits or private not-for-profits, and they're not specifically C3s. The other comment I'll make on that is, in earlier forms of the legislation, there was going to be some disqualifying for those organizations that received Medicaid funding. They took that out of the final bill. So I know I have some clients on the phone that may receive some Medicaid funding. We believe you are eligible for the SBA loans as long as you meet the other criteria and you are a 501c3.
Thank you, Jeanne. Please remember to mute your phone or your computer while you're online. *6. Okay. Let's go over the next question. This next question is for Dan Schindler, tax manager. Dan, are there any?
Say that again, Dan. It got a little broken up.
Can you go over some of the tax benefits of the CARES Act, some of the specific tax benefits?
Sure. Right. Yeah. So there is while the 7A loans may be the most talked about aspect of the CARES Act, there are certainly other available opportunities out there. One being the employee retention credit. So if you retain employees while you are subject to closure or partial closure, you can get a tax credit up to 50% of qualified wages to offset applicable employment taxes. Now, the qualified wages do only go up to $10,000 per individual employee, but any excess of the tax credit over your applicable employment taxes, which is in essence just your 6.2% Social Security taxes. So any qualified credit amount over your Social Security taxes can be refundable. So those applicable wages also are all wages starting on March 13th, 2020 through the end of the year. So eligible employers are any employers that carried on a trade or business in 2020, as well as experienced any significant decline in revenues or were impacted or suspended due to orders from appropriate government authorities to limit their full business. Now, one of the things is what's qualified wages. If you have less than 100 full-time equivalent employees, then all of the wages you pay employees, whether furloughed or not, are qualified wages. However, if you have over 100 employees, these applicable wages are only for those employees which you pay for services they do not typically render. So, for example, it only counts as wages for furloughed employees or employees that are experienced reduced hours. In addition, there's also an opportunity to defer employer payroll taxes. Now, in order to defer your employer payroll taxes, you cannot have any loans forgiven. There's a 7A loan forgiveness that Paul will touch into more. If you benefit from that, you cannot defer your employment taxes. But for all of 2020, if you meet the criteria, you can defer half of your 2020 payroll taxes to 2021 and half of them to 2022. Two separate packages there.
Makes sense. I'm also seeing some questions online here, and we will try to get to all the questions. We're going to go through our question and answer bank that we have prepared, which might cover some of the questions that people are posting online. So we'll continue to go down the list here. Next question is for Paul. There are a couple different types of loans related to the new CARES Act. Can you give us some guidance on the two different types? Because we know that you can only get into one loan or the other.
Well, Dan, I think our clients have been digesting this over the past 2 or 3 days. So sometimes I feel like they're as up to speed as anyone. We've had lots of conversations, but certainly there's the EIDL loan, which is the website-based loan that goes directly through the SBA. The acronym is for the Economic Injury Disaster Loan. It was a completely different process last week than it is this week. It's certainly much more streamlined and focused. And that's a program that's always been with the SBA. They've just listed the coronavirus now as a disaster. So you can get on there and apply for that. There is also a $10,000 upfront grant that they're telling you that you'll get quickly. We've heard 3 days, that we've had some folks that are 7-8 days out here and still haven't gotten that yet. But it's as I said, take a little bit of time. So that's sort of the left side of the ledger here. You can use that for working capital. You can use that for payroll, lots of different things. You can actually have both loans. We're going to talk about the PPP loan here in a moment, which is the Paycheck Protection Program loan. That's the one that's administered by the SBA, but it's driven to the banks, and the banks handle it from there. They underwrite it, process it, fund it. And that's the forgivable loan that we'll talk about just a teeny bit more. You certainly can have both. When the original Senate bill was passed last week, you couldn't. And then between Wednesday and Friday, when the bill went through the House and passed, they changed that. The thing you have to be very careful of, and this is where you will hear me say this in almost every answer that I have today, make sure your banker is aware that you're moving through that process. Make sure your banker is the final decision person on this, because you can only use those things for different purposes. You can't duplicate. If you use them for duplication, there will be some forgiveness ramifications. We wouldn't want anyone caught in that. Some of the terms have changed. I want to be a little careful about talking on the terms, just to give you an idea how things are sort of fluid at this point. I have documentation from 5 o'clock last night from one organization, documentation a little later on from the Treasury. They've reduced the PPP loan, which is the bank-driven loan. The interest rates are now 0.5%. They're a 2-year loan versus the up to 4% 10-year loan. So I think that gives you a direction that the Fed is really moving here, and the banks will get more direction around that. There are some bankers who are probably saying, wow, we didn't know that. Are we going to have to do 0.5% loans? The spirit of this regulation is that the bank is not going to portfolio these. The clients are not going to have to pay them back. That if they do the appropriate things, they will be forgiven. So that's the program that I certainly encourage people to make sure they're talking to their bankers about, so that as they're doing the online process, there's good communication. So I hope that answers the question, Dan.
Yes, thank you. I would like to add to that to say that I'm seeing all these very specific questions online here. We need to all work with our bankers and our trusted advisors to get through this application process. I know everybody is anxious. They want to be first in line. I don't believe that they're going to run out of money. I heard earlier, Dan Schindler, if you want to comment on this, that if for some reason they did run out of money, they're going to go back to Congress and get more money.
Yep, that's exactly what I read today from the Treasury Secretary, that says he doesn't think it's going to the funds will be exhausted, but if that does happen, then there's a quote in an article that says he will be the first one going back to Congress and asking for more money. They are there to support small businesses. That's what this entire stimulus package was for, was to get the small business community through these uncertain and scary times. So the Treasury is ready to support small businesses in every manner that they can.
Are we allowed to comment now, or we have to wait?
If you want to comment, go ahead.
So a couple of things. I've talked to a couple of bankers, right? And I also heard that same comment that you mentioned. The issue is certain companies, if they run out of money, even though they can go back to Congress, it's not going to be instantaneous, right?
What?
So there is a negative ramification there. Okay. I also talked
just like this current application that can be submitted as early as Friday. It's not going to be instantaneous.
Right.
If you submit your application Friday or Saturday or Monday, there's a time period when that will be approved and then funds will be released.
That's correct.
Okay.
But what the banks are, at least a couple of banks I've talked to, said that they only have so much that they can lend, and they've got hundreds of small businesses that they know will apply. So they can't guarantee that, when the money's going to run out or how much they can lend, et cetera. So I know what you heard from the secretary, but could be negative ramifications to a business if they need the money in the first tranche versus waiting for the second tranche if they run out.
True, that nobody knows that actually. So what we're telling our clients to do now is to be prepared as possible, which is getting all your financial house in order, get all your documentation in order. There is a preliminary application out there which has some requirements on it. You get in contact with your banker, you get in contact with your business advisor so that when you do submit your loan, you will be prepared and it will be complete. So that's the advice we're giving right now, because as Paul said, things are changing from hour to hour, not even day to day, to be honest.
But when I asked the banks, right, because they couldn't guarantee how much they could process or approve, I asked them, can I submit to multiple banks? And they didn't have a good answer. Do you have an answer for that?
I do.
Yep.
Yeah. The PPP program is designed for one tax identification number, one entity. So they will cross-check that. If you apply through multiple banks, they're the first bank you apply through at that point in time that produced the application will be ready to go. Your comment, and I know that we have some bankers on the phone, and I would not ask them to join because they're clients as well. But I would just tell you from my perspective, depending on the banks that you talk to, there's a lot of misinformation. And frankly, the banks are scrambling at this point, and they're getting great information now. But last week, they were in limbo the way we were. Banks do have lending limits, but all of those things have changed completely. So when the Treasury Department that basically, runs that industry from the top down has no intention of limiting banks, limiting this stimulus package. So I would caution in being too concerned that the money's not going to be there and that the bank's not going to have the ability to lend. We have all kinds of and sizes of banks here in St. Louis. I would disagree with what's being said, but I certainly would encourage you not to try to apply to multiple banks. It'll clog up the system on one side, and then when it gets caught by the SBA, you'll be limited to just one bank or one particular loan for tax identification number.
Thank you, Paul. Let's move on to another question. This question is for, again, for Paul. So since we're talking about the PPP loan, which is, has the forgivable piece to it, which is what a lot of people and small businesses are interested in. Can you tell us real quickly how that loan is calculated, the loan amount?
Yeah, there are a couple different things that are out there right now, but if you do the math, they end up the same direction. Basically, they're taking your payroll costs, that complete payroll costs, and I would encourage you, there are great websites that list all of the things that are in the payroll costs. They're going to take that number, going to look at 12 months of that. So when you're submitting to your bank, make sure that you've submitted 12 months worth of payroll plus the additional January, February, and March payroll for this year, trailing after that. And they're going to come up with an average. And then they're going to simply multiply that by 2.5. And that's the dollar amount that you're applied for. And as I mentioned earlier, I would encourage you to have that conversation with your bank, because they'll have a spreadsheet that will eliminate some things that we may not even think about, because they will have the ultimate direction from the SBA. The pool of money that you can have on the payroll side is up to $100,000. It does not exclude an individual that makes over 100. It just excludes the excess of their salary over 100. So you take that, multiply it by 2.5. That's the amount of loan that you're available to have. And I'm sure the question will come up in a moment, so we'll cover it a little later. But I want to make sure that the forgiveness piece of that, if you behave yourself, so to speak, and keep your employees hired through that process, there's no question that it's not a forgivable loan. And I had a discussion with an individual from the Treasury and the SBA yesterday evening about 8 o'clock, and both of them stressed this particular comment. This is not designed to be a gotcha loan. They are not trying to get people caught in this thing not to forgive. It's to the benefit of the Treasury and the banks involved to get this thing forgivable, get it moved off of everyone's books and moving forward. So the bank will guide you on that, but they're not trying to catch you in anything here.
Makes sense. Thank you, Paul. Let's just finish off that topic real quick. So as far as the PPP loan and the forgiveness piece, is the entire loan forgivable, or is it only a portion of the loan?
Well, it certainly depends on how you treat it. There are reduction principles in there. If you reduce your salary and you haven't hired him back, there are limits within there. I want to be very careful at this point to not get into the specific details of that, or we could be here for 5 hours. But the intention is for it to be completely forgivable. You can't have forgiveness amount larger than the loan. You would think that would make common sense, but there has been a lot of questions around that. So the forgiveness piece, if you keep employees hired or bring your payroll back to the standard prior to June 30th, that particular loan is 100% forgivable and 100% guaranteed. So the bankers on the phone on the call would tell you that they are certainly incented to do this, given the appropriate time and place and procedures to get it moving quickly. So they will be ready to go soon enough.
Okay, thank you for that. This question is for Dan Schindler, tax manager. Can sole proprietors and single member LLCs without employees take advantage of these loan programs?
This was a conversation we've Paul and I have had over the last few days, and as it stands right now, with our interpretation of how the law is written, owner compensation is included as part of payroll costs. So as you get the loan amount, if you have no true employees but are trying to get a loan, it's based on 2.5 times of your average monthly payroll. When you look at the definition of payroll costs inside the bill, it defines owner compensation as part of payroll costs. It says wages, salaries, commissions, and other similar compensation, including owner's compensation. So how I read that is an owner takes a draw, whether they're a single member LLC disregarded entity, they take a draw and move funds from their business account to their personal account. That would be deemed compensation. guaranteed payments for partners in a partnership. That would be deemed compensation. So yes, I do think all sole proprietors are eligible for this loan, assuming they're taking some sort of draw from the business.
Sounds good. Thank you for that. Any questions on that real quick?
Can I ask a question? Can you hear me?
Yes.
Back on the PPP, if we have therapists who are trying to apply for partial disability and we get this loan, how does that affect how they're paid or just things in general?
Paul,
You
you
want
want
to take that, Dan?
Yeah. If you don't mind, I will say one thing before Paul answers. Is if everyone wants to put in their question into the comments section, whether we have the answer now or not, we will get back to you at some point. Just so if you ask a question online, also put it in the chat, because we're going to review the chat and get all the questions in our question and answer bank and get back to you all.
So I would just comment, when they talk about full payment and full employment, if you have someone out on leave drawing something else, obviously I would assume that you're still paying benefits, and that certainly brings the employee back into your payroll piece. So the goal is at the end of June, on June 30th, that you have that same payroll process from beginning to end. So the thing that we want to be very cautious of is that when we read the law in one particular way, and we have studied that from front to back for the past close to a week, and then you look at it in the practical world, how this is going to apply from the perspective of loan forgiveness. There's still a lot of unanswered questions that banks will be given a lot of direction on. But at this point, if you're reaching full employment with someone that's out on disability, they're still being paid through disability, but they're on your payroll with benefits. All of that should qualify and should not be a factor in reducing your payroll. And I don't know if that I had a clear understanding of your question, but that certainly is a question that's on everyone's mind, and the SBA still has guidance to put out to the banks on that.
Thank you for that. A quick reminder for everybody to please mute their phones or their computers if they're not talking. There's some background noise that we're getting feedback on. Thank you for that. Okay, that covers some of the loan programs, and I know other things are going to come up related to that. Let's switch over real quick to individuals. Question for Dan Schindler. There's been a lot of a topic of discussion of people who have not yet filed their 2019 return and how that can play into the stimulus check that they're expecting. Can you give us any thoughts on that and how that works?
Certainly, yes. So I actually got a question today where there was a little bit of misunderstanding that everyone wanted to file their 2019 tax return as soon as possible so that they could get their stimulus check. Well, how the law reads is if you have not filed your 2019 tax return, they will use your 2018 tax return. So I think the question isn't more of I need to file my 19 return. It's should I file my 2019 return? If you're hovering, a married filing joint couple, if you're hovering right around that $150,000 AGI limitation, well, if your income happened to spike and go up dramatically in 2019, you may not want to file your 19 return, and you may want your lower 2018 return numbers on file with the IRS so that you can maximize that stimulus check. However, on the flip side, if income plummets in 2019 for one reason or another, you may want to file your 19 return as soon as possible so that hopefully they will use your 19 tax return on file as opposed to your 18 tax return. So It's not you have to file 19, it's should I file? And that's a conversation, I think, if you're hovering right around that $150,000 AGI limit, I think that's a conversation you want to have with your CPA.
Now, that could be a timing issue that if you do that, you might get your stimulus check based on your 18 return. But I think the reporting piece for the credit of it is going to happen on the 2020 return. So that could come around and equalize out. But like you're saying, there is a little bit of strategy to think about right now. Any questions surrounding the stimulus checks? Okay. Um, so Paul, a lot of talk surrounding the loan programs, and again, a lot of uncertainty out there, and banks are gearing up, and they're probably scrambling just like we are. Um, so what can businesses do today, knowing that you can't even submit an application yet?
Well, I think what's been happening over the past 4 or 5 days, it's been sort of a training piece for clients and banks alike. So I think a lot of what they're doing has been absolutely necessary because our clients are becoming educated every single day, reading things on the internet. So this is, moving fast and furious. I would encourage a couple things. The application is out there. There's a lot of entities that have it. I know the American Banker Association sent it out. The AICPA has sent it out. There's things changing as we speak, but the application in and of itself is probably set. The question is, do I work with a bank that will ask me to do everything online, or do I work with a bank directly that will ask me to bring hard copies in? It just depends on the bank, maybe the size of the bank. So I would just encourage you to sort of view this like any other credit you would have applied for. Make sure that you've got the application in place, and if that isn't out from a online perspective, certainly it's a simple application, the one we've been seeing, 2 pages, you're ready to go. But make sure you have all your payroll information, irregardless of what you may think and the changes that may come. 2019 payroll reports, January, February, March of 2020, have those ready when your banker asks for them. Have financial information together. When I say financial information, tax returns, a couple years of those, a couple years of financial statements, balance sheets, and income statements. Now, the banks have been getting direction clearly the last couple of days. It may be a streamlined package that's even less than that, because the underwriting of these loans are really not around cash flow. It's around that payroll piece. But everyone's itching to go. Everyone wants to move forward. So I would encourage you to start getting those things together so that when you're able to get in front of the banker or get online. We have one large bank in St. Louis here that I communicated with a few hours ago. Their goal is to have this online, even though you can apply on Friday. It's probably going to be Tuesday because it's going to be an online piece through your online banking where you literally click on that if you have online banking with your company, and it will take you through several documents, and then you're complete. You electronically sign it and move from there. Have no idea if that actually will happen at that point in time, but there's going to be different styles of preparing your information. So start thinking through that, getting that together. I know we're all ready to go and anxious to move, and it's going to come quickly.
To piggyback off of that, I know we stress this in almost every profession out there. Communication is key. Communication has not been more key right now with your bank, with your circle of advisors, just to make sure you're on the same page. Don't let things just linger. Have proactive conversations, and it will suit you well given when things start to unfold and application processes start to happen.
Thank you. Quick reminder to mute your phone or your computer if you're not talking. Paul, real quick, I know there are some banks that are preferred SBA lenders, so they're very familiar with the traditional SBA loan process. Can you give us any thoughts on, does a bank have to take these loans if they're not a preferred SBA lender?
Basically every bank in the country, and there's going to be non-bank lenders that are out there, they're going to be asked at some point, whether they are right now, they're going to be asked to enroll in that program. And that's certainly the SBA will be working through that process. Many banks we have here in St. Louis are preferred lenders from an SBA perspective, so they are very adept at the SBA program. But remember, this program was designed for certain things. So there are going to be clients that they're going to be talking to that have revenue streams significantly larger than they've ever had before and would not typically qualify for an SBA loan. So I'm certain that the banks are gearing up with staff that typically may be commercial lenders that are above the threshold for typical SBA loans, but they will now become SBA lenders for a while moving through this process. But I would assume that every bank, and as I've said, I've talked to many over the last few days, every bank will be interested to get in this program. Some will have to sign up. Some that aren't preferred lenders that have have been involved in the program, but certainly not the preferred status, will have an edge up as well. But I would say, regardless of whether your bank has that SBA program or not, communicate with that banker, because they're going to want to move through that. We received an email a few minutes ago from a bank that was not an SBA lender, but they had a very sophisticated application package and communication to their clients. And while they're being approved, which I understand is about a 48-hour process, they're flying through it as fast. So I'd encourage you to communicate with the bank that you deal with right now first.
Thank you for that. Does anybody have any quick questions related to submitting an application with your banker?
I guess I have one quick question, if you don't mind.
Go ahead.
If we're a company that just literally opened a year ago, and it's an LLC with partners, I just kind of want to go back to the fact that you're saying that the owner draw can actually be part of the PPP. Was I correct hearing that? Because it's a small operation, but I'm understanding the PPP to be something that you could actually use for the owner draw, but then would we be able to still apply for the EIDL for like rent and operations and loss of revenue?
Well, let me sort of back up on the EIDL loan. You absolutely can apply through the EIDL for loss of revenue, other working capital items that you can't on the PP side. But typically, the EIDL is designed to be a smaller loan package than the PPP program at this point. So you're going to have clients obviously doing that. When you move over to the loan on the PPP program, the banker is certainly experienced at taking and pulling out of financials the amount of money that the owner creates, whether it's a draw or whether it's wages. And that is guidance that still has to come from the SBA. They may have literally gotten more guidance even while we're on this phone call, but their whole goal is to maximize the amount of compensation that you have, irregardless of whether your company opened a year ago or 4 or 5 months ago. So I wouldn't get too hung up into those guidelines until you've had a distinct conversation with your bank. But the EIDL program is still a program that requires guarantees, 20% owner or more, individual guarantees. The PPP program doesn't require guarantees, doesn't require collateral. So
And has the loan forgiveness.
And also, and I'm not steering someone either direction. It certainly both can be there, but you have to be careful of duplication of uses.
Correct. And if you're in if you're in the EIDL, I don't think you can do the PPP 7A loan. Is that correct?
No, you can. You just can't have duplication of uses. So yeah, the original bill barred that. By the time it cleared the house and moved out, you're certainly welcome to do both. You just have to coordinate, because that will affect your forgiveness if you use one for payroll and then the other for payroll. And the question I've had earlier, how in the world are they going to track all that? I have a wonderful answer for that. I don't know, and no one else on this phone call knows that at this point. But it is something that should be considered.
Got it. A lot of talk now about this CARES Act surrounds cash flow. It really does. Mm-hmm. I know there are some other parts of the CARES Act that relate to cash flow. Dan Schindler, tax manager, this is a question for you related to charitable deductions and donations, mm-hmm. As well as the 10% normal early withdrawal penalty for retirement plans. Can you just give us a little bit of guidance on that?
So a few individual tax changes that are just for 2020. There is no AGI limitation for cash contributions only, which has been kind of missed in recent conversations I've had. You can't donate appreciated stock that is an amount larger than 30% or 50% or 60% of your AGI. It is cash contributions only. They now have no limitation in terms of AGI for 2020 deductions. In addition, if you're a taxpayer who does not itemize, you take the standard deduction, you are allowed a $300 above the line charitable cash contribution. Obviously not a large number. It's something just for those who don't particularly itemize. In terms of retirement plan distributions, there, if you take an early retirement plan distribution, it has historically been subject to a 10% early distribution penalty. That is now waived. There, you can take up to $100,000 in retirement plan distributions for 2020 only that are not subject to the 10% early distribution penalty. In addition, for 2020, there are no RMDs. There's no required minimum distribution. So if you're someone who otherwise would have had an RMD in 2020, but you don't particularly need the cash, and obviously with the market volatility and down recently, you can actually leave that otherwise RMD in the market in your retirement account and not take an RMD till 2021 in hopes that perhaps the economy and stock market rises between now and then. On the flip side, from the business side of things, and I guess it relates to the individuals as well, one of the biggest changes that I know CPAs like and business owners that have this applicable expenditure, qualified leasehold improvements. Those that have a number of qualified leasehold improvements, I know the retail industry, the restaurant industry is very large, but a lot of businesses have qualified leasehold improvements. When the Tax Cuts and Jobs Act passed, there was an omission that made that default to 39-year property. So any leasehold improvements were subject to 39-year depreciation, not eligible for bonus depreciation. What this CARES Act did do is provide a technical correction to that. It was an error and omission back in 2017, and this CARES Act fixed that provision where now qualified improvement property or leasehold improvements for a more general term are now eligible for 15-year depreciation and eligible for bonus, 100% bonus depreciation. That is also retroactive to September 27, 2017. So basically, more or less your 18 tax return and 19 tax return if already filed. You can go back and amend your 18 and 19 tax returns to reflect 100% bonus depreciation on any qualified improvement property. And maybe the last thing I'll touch on as it relates to taxes is the business income loss limitation. The Tax Cuts and Jobs Act prevented business losses. You could not take business losses, active business losses in excess of $500,000. That has been suspended for 2020. So for those companies that, and maybe particularly S corporations that have large owner salaries and creates a large business loss, that would have otherwise been limited to $500,000 with the balance carrying forward. For 2020, you can take any active business loss, no matter how large. So, and this could also be very, very relevant. This and the qualified leasehold improvement change could be very relevant for active real estate investors and owners. You could generate a large deduction potentially from 100% bonus depreciation on leasehold improvement property, and if it generates losses in excess of $500,000. For 2020, you can deduct the entire amount. So won't apply to a ton of people, but for those that it does apply to, it is a significant benefit.
Yeah, as you can see, there are so many aspects of this new act. They're really trying to help small businesses from every different angle. I know that we keep coming back to and shining a light on the loans and getting some money in, which is very important in this time where people are paying salaries where they may not be working or they may be quarantined. So just to circle back one time, and this question is for Paul, this is related to the employee retention credit for employers, the payroll tax credit. So if you're working with your advisor and your banker, how do you determine whether you should kind of go for the payroll tax credit or do you go for one of the loans, the SBA loans?
I don't know the partners
go through
here.
that process.
The partners in the firm get a little nervous when I start getting out of my lane and talking about specific tax items versus loan items. But it's a real challenge, I think, when you're sitting down. And I think from the overall perspective, many of the organizations and the businesses that I've talked to, unless your payroll is substantial. And one of the things I wanted to mention is this loan potentially could go up to $10 million, where you would almost have to have a $50 million payroll to qualify for that type of loan. But if you have which obviously has never been a part of the SBA lending before, if you have a lot of employees on that larger side, you may want to take a look at that. But at this point, typically the loan's designed for the companies 500 and under with normalized payrolls. So we certainly believe that the forgivable loan makes more sense than the tax credit. But again, if you're sort of in that dividing line, and I can't tell you where that's at, make sure you're talking with your advisor, your accountant, make sure you're doing the right thing. But I would say at a minimum that you would have to be in excess of maybe a $10, $15 million payroll per year for that to make a difference.
Right. Good. Any questions on that real quick?
I did see a couple questions in the comments that was related to what I had just discussed about NOL, or that I did not necessarily discuss, but it was along the lines of net operating losses. If individuals have a net operating loss in 2018, 2019, or 2020, it can now be carried back 5 years. So that's another change as it pertains to the CARES Act as well.
Dan, let me go out of my lane one more time real quick, because I've had several questions and I'm afraid we're going to forget to mention that. But the forgivable loan typically is a taxable event. And in this case, that was stricken in the last House bill. So the forgivable loan is not a taxable event from a banker's perspective. There may be ledger perspectives that you may comment on more, but it is not a taxable event.
That's correct. And that is, like Paul said, that is a difference from the Senate bill that passed last Wednesday, I guess. It was supposed to be included as a taxable event, but what ultimately passed, the House Bill 748 and signed by the president on Friday, it is a non-taxable event on cancellation of that debt.
And I would add to that for our not-for-profits on the phone. We don't think there's anything in this legislation that we've looked at that's going to have any trigger on unrelated business income activities or taxes on unrelated business income. So we don't see anything, including the loan relief, or if you're involved in, for example, the tax credit side of it, none of that should trigger any UBIT problems or issues.
Thank you, Jeannie. Any questions related to those recent topics before we keep moving on? Jeannie, since you chimed in real quick, the different types of loans, I assume that nonprofits have both loans available to them, so they get to choose as well?
Right. Well, unless, as I said earlier, only C3s can take advantage of the PPP loans. So that's definitely written into the legislation, 501c3s. So if you're a 501c6, you would be, the only opportunity we think you'd have on the loan programs would be the EIDL loans. Now, any exempt entity that's a business entity can take advantage of the payroll tax relief clauses if they qualify. But we're only seeing the specific language about C3s in the PPP side.
Good. Thank you for that. We'll keep moving here. There are so many aspects to this CARES Act. If we want to back up just a couple weeks, just to make sure everybody is aware, the IRS did extend the filing deadline and the payment deadline for 2019 from April 15th to July 15th. So I know there was a lot of questions about that.
I would also echo one more thing in that regard, that was a change from the Senate bill last Wednesday to the final House bill that passed. It was originally thought that 2020 estimated tax payments would be deferred until October 15th. That is not the case. 2020 estimated tax payments for the second and third quarters still have their standard due dates at this time. The first quarter estimate for 2020 is not due until July 15th. Second quarter is due June 15th. Go figure. A little backwards, but that's the way it is right now. I wouldn't be surprised if there was some further legislation that moved the second quarter estimate to July 15th as well, just so there is not that the backwards of timing of estimated tax payments. But at this time, first quarter 2020 estimate due July, second quarter due June, third quarter still due in September.
Yes, thank you for that. Any questions on that real quick? The theme of all of that is they're trying to let you hold on to your cash and retain your employees so we can get past this hopefully short-term event and then get back to business as usual when the crisis is over and the April 30th deadline, social distancing, is over.
One thing we've kind of kicked around internally, we're not exactly sure how it's going to be treated, but I suspect they will move that second quarter deadline to July 15th, because on the flip side, why would anyone make a second quarter tax payment and just make a very large first quarter tax payment in July? Something to consider. Happy to talk to each individual clients about if that's a circumstance you fall into. But we're contemplating that right now, maybe waiting for a little bit more guidance, but something we're weighing for sure.
Makes sense. Makes sense. We're reading a few of the questions that are coming online now, and we're answering as we go. One question was about how the individual stimulus checks will be treated. Those are not considered income. Those are going to be a tax credit filed on your return. I keep seeing
back to some of the questions as it pertains to the 7A, the PPP loans, and what's eligible as payroll costs. I see a handful of questions in the comment of, do payroll taxes, do health insurance premiums, what qualifies as payroll costs? And how it reads right now is payroll costs is, salaries, wages, commissions, other similar compensation. It also includes vacation pay, sick pay. It does include provisions for group health benefits, including insurance premiums, payments of retirement plan benefits, as well as payment of state and local taxes assessed on the compensation of those employees. So payroll cost is a pretty wide definition in this regard. So certainly worth having a conversation with your CPA about prior to submitting anything to your bank, because we want to make sure you're capturing everything that is allowed.
Thank you for that. Just so everybody's on the same loop, payroll does include independent contractors, correct?
Yes, that's how we see it. It is any independent contractors. It also includes basically any net earnings to anyone self-employed. So any 1099 pay, any owner compensation is how we read it to be defined in the bill.
Thank you.
I just want to make sure you said that's for the PPP, correct?
Correct. Majority of everything we've discussed has been all related to PPP. And the answer to your question is yes.
Dan, I'm getting a repeated question here over email, the danger of having your computer off to the right. But a lot of folks want to know the difference between things that they've seen last night and today on interest rates. And the Treasury's guidance out there is these loans will actually be at 0.5% and a 2-year maturity, versus what we have seen before. The banks have the availability to go up to 4% or 10-year maturity. Obviously, there will be final guidance on that from the SBA, but it clearly looks like that the intention is for these to be clearly forgivable. The banks aren't, the question early this morning was, why would a bank want to do my loan if it's going to be on their books for 0.5%? Treasury has every indication of not only making the employee, the borrower whole, but the bank whole as well. The banks are strong, well capitalized, there's no desire for the stimulus package to weaken that in any way, shape, or form. So I wanted to make that pretty clear.
Thank you for that. We're getting really close to the 1 hour mark, only about 5 or 6 minutes left. So would like to open it up real quick for some general questions or any questions that we didn't cover or specifics that are in your mind related to the new CARES Act or the loans.
Dan, this might be a question for Paul, maybe for Dan Schindler as well, but getting a lot of questions on how it works if, you've already had to lay off some employees, unfortunately. Does that impact the amount of the PPP loan you can get? And if it does not, are you required to hire those folks back, or can you technically use those funds towards other things, even though that might eat into your forgivable loan portion?
You want to take that, Dan?
We can both tackle it, but go ahead. I can chime in as well.
So basically, the premise behind this is to make sure that we're retaining full employment one way, shape, or form. So they've given you a deadline, but businesses had to make decisions last week many times before this stimulus bill was really out. So there are opportunities to bring people back that went out on unemployment. If they went out on unemployment and you were paying their benefits, at this point they are considered in the payroll calculation. If they went straight out on unemployment and you didn't pay medical benefits and things of that nature, you have the ability to hire them back prior to the June 30th deadline. And what we are reading at this point, everything is forgivable. But you'll get some guidance from the banks about the takeaways that may happen if you've changed your portfolio or your count of employees between now and then. There are some takeaways, but the real focus is trying to keep people employed. If you can do that, you're fine, even if you've had them out on unemployment. I know the biggest question that we keep hearing that we have to be a little cautious about, because it's more of a human resource attorney question, but unintended consequence, really, there are folks that will make more on unemployment than they will working, but obviously when you go back and offer them the job back, they're not eligible for that unemployment anymore. So you can certainly force that issue if you need to, but there's certainly no intention of taking the forgiveness away.
Paul, that's also a short term. Go ahead, Dave.
Yeah, you're right, Dan. Dan Mudd, as you're about to say, I presume, is it's only these unemployment benefits are only short term.
Correct.
And one thing I was going to add on to that is if you have laid off or furloughed employees, to the instructions in the Treasury application that came out last night or yesterday indicates you have until June 30th to rehire employees.
Right. Right. I'd like to jump in real quick. We're almost 2 minutes away. We will stop recording around 2:30. We will stay. A few of us will still stay on the line past 2:30 to answer more questions. In the meantime, I'd like to point everybody to our website, anderscpa.com. We have formulated a COVID-19 resource center where we have a lot of blogs. We have a synopsis of the CARES Act posted. There's probably going to be another webinar probably after the SBA opens for applications on Friday, because as Paul alluded to, we're learning more every day as we get closer to the deadline and as SBA releases more information. So there probably will be another webinar at some point. It could be Saturday. It could be early next week. Again, we're learning as we go, and as information comes out, we're trying to keep everybody that we know as informed as possible. So we do thank everybody for joining the call today. And again, we will stay online and try to continue to answer questions for a brief period. So if you do have a question, please speak up at this point.
I have a question about the 8-week loan period. Is there a limit on when that loan period can start or end? Or is it like, could this start after the June 30th date, or is it required to start before that or end before that?
Well, the answer we're getting at this particular time, it has nothing to do with the application date. It has to do with the date that you receive funds. And everyone has to be closed and funds received before June 30th. So there certainly could be a period of time that you delay that if you don't need that. I would encourage you to start the loan process, but just because you start the loan process and get approval, and this goes for both loans, you don't have to take the funding immediately. So if you're wanting to delay that, the clock starts when you take the funding. I hope that answers your question.
It does. And what you're saying is the last day that we can take the funding is June 30th.
Yeah. Yeah. But just let me give you a practical comment from the banking side. Don't wait that late. But yes, you could legally.
I have a question. On the average monthly payroll, can we include contractors?
Yes, I just answered that online. Yes.
Oh, you can. Okay.
Yeah. They just have to have something associated directly to your business. If you pay a painter once or twice and provide them a 1099 and they're not focused within your business, that's not going to count. But many companies have the 1099 that we consider employees, and banks would do that as well.
Great. And Paul, you might have said this about the 2019 payroll and then the year to date. How do you calculate the average monthly payroll? Is that for 2019 or trailing 12 months from today?
Dan, you're itching to answer that.
Trailing 12 months, I believe.
Okay, thank you.
Any other questions from anybody still online?
Yes, I have a question. And I don't know if it's been addressed yet. What about the debt deferral, the 6-month SBA loan deferral program that's been floated out there? I may have missed y'all talking about that.
Well, the 6-month debt deferral is going to apply to a couple different things. It can, and we're waiting for some final information on that, and the bank probably has that by now, but it can apply to existing SBA loans that are out there. But really the spirit of the law was that if you have this particular loan and it becomes a loan and it takes a while for them to administer it before it gets forgiven, there are no payments required. There's certainly a 6-month deferral on that piece. Or if you aren't able to keep your employees intact and you lose the forgiveness and it becomes a long-term loan, which at this point there's some question, but it appears that it will be a 2-year loan at this point, it would have the 6-month forgiveness as well.
I'm sure we'll find more information on that soon as things keep developing.
So I have a question. Can you hear me?
Yes.
Okay. So two questions. One is, if you're a sole proprietor or LLC that's been getting compensated by draws in the past, can you, instead of hiring the full staff of employees, put yourself on the payroll by just onboarding yourself and creating a salary if you didn't in the past?
Everything has to be effective February 15th. So they're going to look at everything that trailing 12 months. So changing the way you get compensated shouldn't affect anything negatively or positively. It certainly wouldn't exist.
Well, in order to qualify, instead of hiring 2 staff members, you can make a payroll yourself going forward, just so you can get reimbursed or forgiven whenever they do the calculations going forward.
I see what you're saying. Yeah, you know what? That is a gray area. My opinion would be that as long as you're keeping your payroll costs, whether it was a draw before and now you're on payroll, because the bank will look at both of those and put that in a whole package, as long as you're keeping that the same. But I certainly would defer to your banker when they start underwriting the loan. Okay.
Second question is, I know that everybody has the June 30th deadline for this entire effort. However, if this, if the stay-home order continues to extend through May, June, July timeframe, will this automatically get extended? Because obviously, all these loans are only sustainable if revenue is coming in the door. So, what would happen if basically we're all still shut down, halfway shut down. We're not receiving the revenue. What good is it to hire 100% of staff if you don't have customers to fulfill, that business requirement?
Sure. I'll give you a fact and an opinion. Fact at this moment is everything is June 30th and nothing changes. Opinion, based on everything we're hearing, even the Treasury Secretary today is saying that their intention is not to just throw good money for a short period of time and then it all becomes bad. So I would expect either stimulus package number 4 or an extension of what we're seeing. That's opinion. But at this point, the only thing that's written is that it ends on June 30th.
Gotcha.
I'd like to jump in real quick. Our firm has received a lot of questions from clients and prospects and bankers over the last several days. We've created a question and answer bank that we're going to be posting on our COVID-19 Resource Center website at anderscpa.com. That's not on there yet. There are a lot of other things that are on there, and I encourage you to look at it. But soon there will be a question and answer bank, and a lot of the questions that people have been asking are already on our Q&A bank. So that should be a good resource for people to go to going forward. Anybody have any other questions while we're online?
All right. Well, we thank you all. That's for sure.
Thank you.
We thank you for your time, and we will probably have another webinar. We'll have more information out soon, and we thank you for your time.
Thank you.
All right.
Bye-bye.
Thank you. Wonderful job. Thank you.